Welcome to Trading Nation. I'm Mike Santoli. Shares of McDonald's surging on Friday as the Dow's biggest gainer, up 2% after the fast food chain said it would hike its quarterly cash dividend by 15%, also announcing it would see system-wide sales growth of 3 to 5% starting next year. The stock recovering from a correction, but still one of the biggest Dow laggards this year. So how should investors trade the name? Mark Newton is with Newton Advisors. Larry McDonald with the Bear Traps report. Guys, welcome. Mark, tell me about the field position for McDonald's. It's basically been going sideways for about a year and a half here. So how does it look to you?
You're right, Mike. However, this whole sideways consolidation is really part of a longer-term uptrend. And so it's really difficult to be too bearish when you take a look at the longer-term view on McDonald's. And really the stock has formed what many technicians refer to as a symmetrical triangle pattern. Recent lower highs, but yet higher lows since January. It really won't take much until you get back up above 166, which I feel is going to fuel a move to right near 190 in the stock. And so still difficult to be real bearish. And you're right, the stock has lagged for quite some time this year. However, it's important to really put this in a bigger perspective and look as how the stock has trended really since the rise started in 2015, the level of its most recent longer-term lows. So.
All right, Larry, how does McDonald's stack up as the kind of a name that you might want or not want in this particular environment? You know, it has a reputation of being a pretty defensive business, now kind of a yield stock, but not necessarily a lot of dazzling growth.
Well, I think at this stage, Michael, that's where you want to be in the McDonald's of the world, defensive names. If you look over the last 2 months, value and staples have been outperforming growth since July. Believe it or not, there's been a rotation. And that's the amazing thing about this bull market, as you've called so well. You know, what happens is you just have one rotation into the next sector, and a new sector basically picks up the heavy lifting. But McDonald's, we want to be overweight value, XLP versus the XLY. We want to be overweight staples and value right here, including stocks like McDonald's.
Yeah, so McDonald's kind of acts like a consumer staple stock, right? It's kind of an all-weather business, even though I don't know that it's necessarily in the XLP. Larry,
exactly.
Just a quick other point. I mean, often McDonald's gets hurt by a strong dollar, maybe gets helped by a weaker dollar. Is that a piece of the story?
Yeah, I'm worried about that's the concern. I mean, in January, the mantra was from Wall Street that global synchronized growth was going to carry emerging markets. And emerging markets was one of the most crowdedly recommended trades in January. Now, on the global growth picture, we believe global GDP has gone from about 3.7% to down to 3% because of that dollar. Now, recently we've had the dollar move lower, about 3% lower in the last 2-3 weeks. But the dollar is a big problem, and that kind of explains that sideways pattern you're talking about. So definitely, Michael, you're absolutely right. You need that dollar to behave. And that's what you'll probably get in a late cycle.
All right. Larry, Mark, thanks very much. Thank you for joining us today. And thank you for watching Trading Nation. I'm Mike Santoli, and we'll see you again next time.